What's up, everybody? Welcome back to Crypto for You. Haven't talked to you guys in a while. I'm actually not feeling so well, so probably this live stream will be a little shorter than usual. Recently recovered from a big fever, but I want to talk about something very, very interesting with you guys because if we look at the crypto chart, you guys can see that Bitcoin, let me real quick hide the Bollinger Bands. Bitcoin actually rose after falling down to $25,000. It rose to 28,100 like I predicted and then fell back down. This is very, very important for Bitcoin. This could tell us what Bitcoin will do next, and what Bitcoin will do next is very, very interesting. Now, with that being said, let's go straight into the video and talk about what Bitcoin did first. So, first of all, it rose to the resistance point, which is this big orange level right over here. This was our area. This was our support for this huge channel. And of course, this channel is on a daily time frame, so it's not a long-term channel, and I knew we would fall off eventually, but the fact that we broke it right now shows us that we have some bearish momentum in the larger time frame. But as you guys can see in the short term, we fell down to a specific area, big support level, rose back up, tapped it basically, and also tapped this resistance area, and then fell back down to that same support area. Is this a sign of bullishness? Is this a sign of bearishness? We'll find that out in a little bit. But what I want to tell you guys right now is that you do not need to be afraid, because this is a cycle. This is a regular cycle that Bitcoin does. If you go on the weekly time frame and check this out, you can see that we were at $15,000 about three-fourths of a year ago. I don't know. But we rose from 15,000 to 30,000 pretty quickly if you look at this cycle right over here. And you know that we cannot go on forever. That's what these channels are for. You know that channels will eventually break out to the downside. And so you just have to watch the support levels. And if we do, then it becomes a pretty big dump to the downside. But as you guys know, this is not the end of this cycle. How cycles work is that usually there could be Elliott waves. These cycles are usually Elliott waves. So we could take this cycle and turn it into 5 different waves. For example, this wave right over here was the A wave, and that means that the next wave will be a correction wave down to about this area, and then that's called the B wave, and we will start rising up once again. But the question is, how far will we rise if this is an Elliott wave, if this is a regular cycle? Well, the Fibonacci is used to figure that out. So if we grab the Fibonacci, and I already have it drawn out right over here, but this Fibonacci shows that we could fall down to around 23,000 to 21,000. That's how low we could fall down to, and that's because Fibonacci really usually shows a huge support level down to the 0.618 level. That's the most common area for Bitcoin to fall down to after going to its trend high. It reverses and falls down to around 21,600. So if we break this support area right over here, the 0.382 level, which, because we see a ton of bearishness, because we confirm resistance at this top resistance area, if we break this area right now, the support area, we could see a fall down to first 23,400 and later 21,600. That's just looking right off the bat what it looks like if this is an ABC correction, because that's how these corrections work. And this is what's interesting, because when Bitcoin rises up, it's a 5-wave move. So there's move 1, 2, 3, 4, 5. There's 5 waves for when Bitcoin rises up. And then after that, there's a correction. And this correction usually goes in 3 waves. So it's 1, 2, 3. And what's interesting is that we could be in either wave 1, wave A for this correction, or wave B. It all depends where you look at it. Because if we go on the 4-hourly time frame, and I zoom out to show you guys this wave right over here. It doesn't look that great on the 4-hourly, but on a daily, this does look like a regular wave right over here. This does look like a regular A wave. Now, is this the first wave or is this the second wave? Now, the first wave is of course a trend fall, and then we would see a small trend rise and then another fall down. And of course, we can use the Fibonacci retracement to figure out where we would fall down to or rise up to. For this ABC correction wave, we can check how far a B wave should rise by getting the Fibonacci from the top to the bottom. And you can see that usually we fall down to, of course, again, this golden pocket area, 0.5 or 0.618 usually. But we have almost tapped the 0.5 area, which is interesting because we have not actually entered it. So the question once again arises, are we in the end of this A wave, B wave, and are about to see a C wave, or is this just a tap down to this area, is this still an A wave? And will we see a rise up? And of course, it all comes back down to, are we going to confirm support right now? If we confirm support at this area, what we could see is a pump back up to this area right over here, this resistance line, the 0.236 area at around 27,800. And if we do break this area, then of course we could see a rise up even farther. But what that would mean is that we would hit the target of 0.618. And actually, if we do some sort of pattern like this does look like a W pattern. So taking this W pattern and drawing it out, the target is around 30,000, which is 0.786. Of course, that's a little far, but this could still be a legitimate ABC correction wave. That is, if we get rejected from the 0.7 level. Now, that is also a very huge resistance area. So that could be a great point of rejection, great point of reversal for us to continue the wave down. And the question comes back to, will we confirm support at this area? Now, of course, we have other suggestions. Of course, if you grab the Fibonacci retracement from this part right over here, saying that you think this is an ABC correction and it's a smaller correction, then we grab the Fibonacci retracement from the top down to the bottom, and you can see that we actually did rise up to the 0.618 level almost perfectly, which is why we got rejected off of a seemingly random area. Now, if this is a rejection area and we are done with the B wave, then how would you calculate where we would fall down to? How you calculate that is you grab a Fibonacci extension, and all that is just a Fibonacci that you move with the trend. So you grab the top to the bottom, and then you just draw this out. It's a bit little complicated, but what this is showing us is that we could fall down all the way to around 20,000 if this is a true ABC correction wave. Now, that does seem like it's a lot, but of course, it's not perfect. We could fall a little bit higher. Of course, we could fall a little lower, but most likely $20,000 is the farthest we will ever fall down to. And of course, it's possible. I did talk about this in my previous live streams a lot. We could fall down to 20,000 because this Fibonacci retracement on the larger time frame also shows that we have a huge support on 20,300, which means that we could fall down to $20,000. Of course, it could not happen. It's not 100%. If we confirm support at this level, we could see this happen in a while, but in the midterm, we do see a ton of bearishness, which means we could possibly fall down to $20,000. And this is not the end of all the bearishness, because we have more indicators of a fall. For example, if we do break this support area, then this technically, of course, is a little ugly, but this technically could be an M pattern. This is a reversal. And this reversal, if I take this support and figure out where it's going to fall down to, it shows us it's even lower, but it's also bearish. Of course, this is unlikely that we're going to fall down to 19,000, but this is another bearish pattern that could play out. Even if we fall down to 20,000, that's still basically 70% done. And how indicators work is that you don't need to fully 100% reach that target area. It's around 70%. So if we reached 70% of the desired target area, there's a chance that it could just not reach the rest. And that's around $20,000 once again. Of course, this is not 100%, but there are more indicators showing us this bearishness. If we break this level right now, we could see that fall down to 20,000 potentially. The next thing is on the weekly time frame, which is a larger time frame, but this is a very big bearish thing. This is the Ichimoku cloud, and the fact that we could be confirming resistance on the Ichimoku cloud right now, because if we look at it, you can see that we were trying to basically break this Ichimoku cloud for a while, but we could not. And right now we just disconnected from it a little bit. And look at this. Once again, if we do break below this level and confirm resistance, then this is 100% a break from the Ichimoku, and that means that this huge cloud right over here is now a resistance area. And of course, for us to be in a bullish cycle, we need to break the Ichimoku cloud. As you guys can see, we were like this for a while. So the Ichimoku cloud was a big resistance area for Bitcoin right over here. This was right before the previous Bitcoin rally to $69,000. There was an Ichimoku cloud that was acting as resistance. We did have almost the same exact pattern that we did last time. We were also trying to tap the resistance area, but as you guys can see, we actually confirmed support. And once we confirmed support, then we rose up. Of course, if we do look back, you can see that we did break out, basically have this as a resistance area. But the fact that at this time it looks different because we actually entered it shows that what we're doing right now is not a perfect recreation of the past. And if we look at right now, we could be doing something entirely different. And this is due to a ton of factors that I'm going to talk to at the end, but it's mostly because of the Bitcoin halving and where we are right now. So we could be breaking off from this Ichimoku cloud, and it links back once again to this support level. And if we break it, of course, if we confirm support at this level, this could be bullish. We could rise up to the 0.236 area, break this, rise up to a higher area, and play out what we did right over here, where we broke up into the Ichimoku cloud, confirmed support, and started the rally up. And the question is, once again, will we confirm this huge support area, or will we break it and fall down to 20,000? Now, looking at some more bearish, potentially bearish things. The daily Ichimoku cloud is also a big thing because, as you guys can see, the daily Ichimoku cloud has now shifted to red. Now, what a red Ichimoku cloud is basically a bearish trend on the daily time frame, which is not that big of a time frame. This could be, once again, just a short-term cycle. This, of course, can happen a lot of the time. If I go on, I have to stay on the daily time frame. If I go back in time and check out some of these areas, you guys can see that we did have these trends up, trends down. Of course, daily time frame is not as small as you think. This could take us like a third, 3/4 of a year or something like that, but it's not a whole entire trend. It's just a cycle that's part of, for example, a bullish trend. And since we potentially made a red Ichimoku cloud, a bearish trend right now, this could tell us that we could be falling down to $20,000. Of course, this is not 100% accurate. Once again, we do see fake Ichimoku clouds sometimes. We see fake reversals, but this Ichimoku cloud is, of course, not a lagging indicator. It actually shows us the future. And now we have a huge resistance area at $28,000 that we now need to break. And so, if we confirm support at this area and rise back up, the next huge resistance area for us to break will be at $28,000, which is not only the Ichimoku cloud resistance area on the daily time frame, but also the 0.236 area, the 27,800 to 0.236 level, that huge resistance area on the Fibonacci. We can see that it's also a huge resistance area. So if we confirm support at this level, this is not the end of our struggles. We do have more resistance lines above us. Speaking of resistance lines, we have more bearish resistance lines because we have more resistance now. We have all the moving averages on the daily time frame. You can see that we have broken all important moving averages, the 50, the 20, the 100, and the 200 daily moving averages are now all broken. The closest one to us is the 20-day moving average. And as you can see, a huge resistance area for Bitcoin right now is at $28,000, and that is the 200-day moving average. That's a very big indicator. As long as we are above this 200-day moving average, we are in a trend that's rising up, as you guys can see. But as soon as we break it, this could be a sign of a bearish trend. And once again, you can see that we have a chance that we have already confirmed resistance. This is what this pump was. We rose up there, and an instant bearish reaction caused us to fall all the way back down. So this could be a huge bearish indicator, the fact that we confirm resistance at this 200-day moving average. But sadly, that is not all. If we go on the weekly time frame, we have also broken actually 3 out of the 4 moving averages here, and they're the big ones too. We have broken the 20, the 200, the 100 week moving averages. They are much bigger moving averages, and as you guys can see, to make a bullish trend, to make an actual bear market, we should stay above the 20-week moving average. As you guys can see, in bear markets, we stay below the 20-week moving averages, and in bull markets, we rise up. But of course, this is not always perfect. We have, for example, these rises right out of it. And this could show some bearish action in the midterm for Bitcoin, for example, falling down to $20,000. But of course, this is not all bearish news. We have bullish things. For example, on the short term with this consolidation, This consolidation on the short-term time frame is pretty bullish because even though we have rejection up over here at 28,000, we have consolidation at the bottom. We have tapped this level 4 times already and we cannot seem to break it. And as long as we stay on the support level, we will not fall. Of course, I've been talking about this a lot already on the live stream. If we confirm support on this level and start rising up, that's very bullish action right there. But that's not if we get rejected off of 27,800. As long as we stay between this level, this support level, and this resistance area, you cannot tell what is going to happen. We will continue to bounce around inside of this area, maybe for even like a couple of months until we figure out what is going to happen. Like, for example, we did right over here at this BART pattern. We rose all the way back up and all the way back down, and now we're once again tapping the area. What this could mean is that we will continue to make this consolidation area, throw out a ton of random players, a ton of players that will not stick and leave only the long-term people before rising up. Of course, if we break this level, like I said already, $20,000, if we confirm this level, then the next area is actually at around 28, 29 to 30,000. We have a whole entire huge resistance box. If I can draw a box real quick, around 29,000 to 30,000. This is our huge resistance box that if we confirm support at this area, we are most likely, once we break this, and we will rise up to here. Now, the big question comes up to, is this consolidation or is this an ABC correction wave? And if this is a consolidation and we do rise back up, then we will continue doing this bearish and bullish patterns and seemingly random price action, but it does not change my thesis. It does not change what I said, because once we do choose either to fall down or to pump up, we will do the same exact things. We will rise either to around 28, 29,000 or fall down to 20,000. It does not change, but consolidation is possible, and it basically depends on if we confirm support. But there is a time. People are wondering, all I'm saying is that Bitcoin could do something and giving us targets to where it could do. There is a time. We have around 30 days to figure out what's going to happen, or this will become very, very bearish for Bitcoin. Because if I go on the monthly time frame and I turn on the moving averages, that's not what I wanted. The moving averages for Bitcoin on the monthly time frame. These are very big moving averages. We only go below these moving averages in very key and small events. For example, crisis, world crisis. For example, back over here at the COVID dump, we only broke below this moving average for around 2 months. But it was a time where we fell very, very fast, very, very far. And a lot of people thought we were going to fall down to zero. And that was the time when COVID happened. And so this crash down to around $4,000 was severe, but it only lasted 2 months before we rose back up. We rarely stay below this level unless, of course, we're reversing from a huge rally. For example, how we did right over here. The thing is, we almost were all the way back up above it once again, but we could not confirm support. If we would have confirmed support at this huge moving average, that is a very bullish thing to happen. And it could still happen, but the fact that we are already below it is pretty bearish. And not only that, we are also below this 50-month moving average. Now, what I want to tell you guys is that we have around 30 days before this monthly candle closes. 25 to be exact, but of course we got to give us a couple more candles. If we confirm resistance on this level, that is very, very bearish. Of course, we could rise up in the short term and rise to around $26,000, where the 20-month moving average is exactly there. It's at 26,000. But of course, we have 30 days to break this moving average, and then either when we're going to be below it or when we're going to be above it, we're going to have 30 more days to either have a bearish candle down or a bearish candle up. I mean, a bullish candle up. Because not only do we need to confirm resistance, we need another candle that falls down. In total, this could last all the way. This consolidation that I've been talking about could last all the way 60 days. But this follows a very big thing I've been talking about. I've been talking about the Bitcoin halving cycle and how it's affecting Bitcoin for a while already. And if you go back in time, you can tell the same exact thing has been happening. We have the Bitcoin bull market in the first quarter of the halving. After that, we have the top actually happening around the second quarter of the halving, the reversal happening on the third quarter, well, almost the third quarter, and then after that, a price, uh, a time where Bitcoin can't figure out what to do. Maybe it rises a little bit up, maybe it falls down somewhere in the middle of there, and seemingly people debate whether it's going to rise up or fall down. But until the next Bitcoin halving, we do not see another pump all the way to the top of the previous all-time high. We do see, of course, some rises and some falls, but nothing close to what we'd had over here. We usually see small pumps up, and by small I meant what we did in the last year. We had this $15,000 to $30,000 pump. That's not close to what we did over here in 2020 when we rose from 4,000 all the way to 60,000, and it was crazy because we did that in around the same time as what we did right over here recently. We rose much faster over here in the first quarter of the cycle than what we did right over here. And this has been happening for in history everywhere. So you guys can see we have this small rise we could see falling down, and this does not break a pattern because as you guys can see we have this right over here. We also had this pump up, but then a random decline in Bitcoin. We had this random decline. We also had a ton of consolidation. This period is some random action for Bitcoin, but as you guys can see, it never even came close to the all-time high for Bitcoin. It came around halfway, which is about what we did. And the question you guys are wondering, what could we do? Well, we could be falling up, rising up and falling back down until the next halving. And like I said, depending on what we do, this will decide whether we're going to fall down to 20,000 or we rise up to 30,000. And then after that, we will have to see. Because we have until March of 2024, the halving, to just fall down to $20,000 and we will be fine. This is why I'm telling you guys not to be scared. We have until March of 2024 to be at this area, and nobody should be afraid of this. A lot of people are talking about how Bitcoin is supposed to go to $100,000 within this year, but it's not going to happen. The Bitcoin halving is the actual cycle. This is a 4-year cycle for Bitcoin, which means even if we fall down to around $20,000, this will not affect the cycle at all. As you guys can see, if we take this rate of decline that we had right over here and just move it straight down at the same rate of decline, we have Bitcoin going down to 20,000 around maybe December, which is a couple months, like I'm saying. After that, we could see a pump up. And by the time we reach the same exact area, this could be already March, April, May. This will be, if we fall down to 20,000, reversal until around March, April, and May. This is the Bitcoin halving speaking right over here. This is the cycle that's been happening for 4 years now. As you guys can see back in time right over here, we have the same exact thing. Slow rise up, some dumps in the short term, and then right over here at around right after the halving, this was actually around a month after the halving, we actually rose up. Same thing right over here. As you guys can see, we had pumps up, dumps down, but around a month or 2 months after, we actually saw this huge increase. Right over here also, we also had this rise up, fall down. This happened a little earlier, but we had this fall down. Of course, this was a global crisis, but so technically this wasn't supposed to happen. We're going to count it. And around a month or 2 later after the halving, we started to rise up. So if this is true, then we could see a pump up to new all-time highs. That huge pump that everybody's been waiting for, 100% could start happening in around June of 2024. That's the deadline of when this pump is supposed to happen. And until there, of course, I'm not saying that we will 100% fall down to $20,000, but we cannot rise up to $100,000. And we see a ton of bearishness in the short term. So in the short term, we could see something like this playing out. Easily could happen. $20,000 and then just a continuation of a rise or a fall. And pairing this with global events, for example, the BRICS currency coming out, this could affect Bitcoin very, very badly if World War III starts. I'm not saying that it will, but hypothetically, any global crisis, World War III, another coronavirus, anything happens like that, this could shake up Bitcoin badly, like we did right over here. And it will be fine for the Bitcoin cycle, and Bitcoin will straighten out by June of 2023. So do not panic if we fall down to around 15,000 once again. That would actually be the best time to buy instead of actually selling. Never panic sell. And with that being said, I hope you guys enjoyed this live stream. I am a little sick, so I will not answer any questions today. But I hope you guys enjoyed this live stream. Of course, not the best today, but I'll see you guys tomorrow in the next live stream. See ya.